The ECB made a statement this week that the euro area financial system is resilient to occasional bouts of financial market volatility. But just how much can the ECB take? Joining me to discuss this and more is Christopher Shiells. Christopher, this week Spanish annual inflation stuck below 0%. French unemployment reached record levels and euro area consumer confidence hit minus 5.9. Do you agree with the ECB statement, or is this bout too big?
It's certainly more resilient than it has been, for example, during the depths of the debt crisis and when Greece was teetering on the edge of exiting the EMU. But the ECB has since conducted bank stress tests and has assumed greater responsibility of oversight via the SSM, while the EBA plus other regulatory bodies have imposed tighter rules with higher capital buffers to cushion against shocks. However, financial stability is not assured by any means with all the ongoing risks in the Eurozone and the global threats posed by China's slowdown and Fed policy normalisation and other various factors.
US economic growth performed better than expected, expanding 2.1%. Growth has been described as good enough to achieve progress in the labour market. Has this revision highlighted further economic recovery?
Well, the 2.1% upward revision was in line with our expectations, market expectations. It was an upgrade from the advanced estimate, and the Fed's forward-looking growth tracker, the so-called GDP Now monitor, is currently running at 1.8% pace, which suggests the overall expansion for 2015 will meet FOMC projections. But the jobs market has been robust anyway, and Fed officials have indicated that 100 to 140,000 monthly payroll for gains are sufficient to start raising rates. So it's still quite a bit below the current rolling average. However, other areas of the economy are far less stable, with some economists and observers predicting a downturn or even a recession in 2016. Hence, the Fed's supposed to proceed cautiously and gradually.
The lira weakened for the fourth day. Traders are following Turkey's new trade sanctions implemented by Russia. Investors are already concerned. So what are the further risks for the currency and the central bank?
Well, in my opinion, the key risks for the Turkish lira remain what they were before the shooting down at Russian jet. So you've got capital outflows related to rising US rates, especially as the CBRT is shown is in no rush to hike rates, and the uncertainty around President Erdogan's desire to move towards a presidential system of power. Obviously, the actions this week just increase the geopolitical risk premium in the region and complicate it even further. But we don't know exactly what's going to be put on the table with regard to retaliation from Russia. I think Putin probably have to do something just to show his face a bit, but not sure exactly how far they're going to go. The market already seems to believe there'll be no desire for any military escalation, and we've seen the lira actually move off the 1 month lows versus the dollar earlier today, and we have all noticed from some contacts that they're taking profit on that short lira trade just in case there is an olive branch of reconciliation over the weekend. But the economic impact of reduced trade and tourism for Turkey is a downside risk to its growth, which is already sort of lagging behind where the government would like it. So even though we don't know the exact impact, it is another negative for the lira in the medium term, which, along with the new government programme, which omitted to reference central bank independence, increases the risk of looser, expansive monetary policy next year, which has really seen some selling of the lira off the back of that. And it will remain a particular overhang on sentiment because of the risk of a politically motivated premature easing of monetary policy or an even longer delay of hiking if that's what the central bank really wants to do. And with inflation so structurally high, without a rate hike from the CBRT, we still remain pretty bearish on the lira over the medium term. It is a large trade partner for Turkey. I don't know exactly how agricultural imports really are a big factor of that. Nothing to do with the gas pipeline, because I think that's too important for both countries. Yeah, there will be an immediate impact on imports to Russia from Turkey.
Well, Christopher, thank you. That's all from me, but have a great weekend and click back on Monday for the week ahead provided by Sam Meredith. Goodbye for now.